Okay, so let's get started with getting into how to maximize your profits using the auto trader. Um, as mentioned before, for those that joined earlier, you don't have to be part of the auto trader to use this strategy, but it's really useful. And personally, for me, I've been using it to maximize my profits on top of the auto trader placing its trades. So, and as far as like what type of returns you're expected to make, it can be somewhere around 3%, 3% additional, maybe even more. It depends on how you do this. Let's go into the strategy here. Make sure to have a pen and paper to take down some notes. And this training is going to be recorded, so you can go back into it and have a revision on it. So I'll try to explain it as simple as possible. It's a little difficult for those that are brand new. I can't go into like, what is a lot size type of thing, like the very basics. It's going to take way too long if I cover over all the basics and then get into this strategy. But as far as the strategy goes, it's using a strategy called hedging. Is anyone in this group familiar with hedging? If you are, put it in the chat area. But I'm going to pull up the definition of hedging here. One sec. Okay, so I'm pulling it up here. So hedging, if you can see here, and I see, let's see, there was Nab said you're briefly familiar with it. Yeah, so hedging is a risk management strategy employed to offset losses in investments by taking an opposite position in a related asset. So it's when market's going, let's say in an uptrend, you can place a sell. If it's going in a downtrend, you can place a buy. Hedging is actually a really good tactic to be able to like have a 100% winning. And it's not exactly 100%, but you're not going to lose money if you actually stick to this strategy here. So it's basically, you're going to be 100%. So it's very important that you pay attention to this because it can make you a good amount of money. All right. So starting off with, how do you get into a hedging trade, or even how this whole strategy works? So let's just say you have a $1,000 account. Your account. So the strategy goes, what I've been sticking to is 750 micro pips for the take profit. 250 would be what's called like, it's going to be like the stop loss, but it's not really a stop loss. I'm about to explain exactly how this works, but 250 is going to be like our imaginary stop loss. So I'm just going to say imaginary stop loss. It's not actually going to be the stop loss. The stop loss is actually going to be 1,000 micro pips away from entry. Okay. Once you have this memorized, by the way, it's going to be real easy. So like right now, it might be a little complicated once I go through it, but as we go through this training, it'll start making sense. So just hang in there. So 750 micropips take profit, 250 stop loss, imaginary stop loss, and then the actual stop loss. Let me put SL. stop loss is going to be 1,000 micropips away from the entry. So what this would look like, and I'm going to bring this down here. So I actually have this target right here. Let's say if we're placing a buy, if we're placing a buy right now, if you can see the numbers on here, it shows 1,000. So 1,000. This is 1,000 micropips or 100 pips. So I mentioned right here, 750 micropips take profit. So that means the profit level, we would put it at 750. And then the imaginary stop loss is going to be 250. Okay. Like I put right here, stop loss, imaginary stop loss. So what the imaginary stop loss is we're placing a trade on the opposite direction. So if we enter in for a buy right now, we'll also have a pending sell order going the opposite way. And the reason for this is because when price is shooting up, there's a chance that it might stop and it'll go the opposite way. If it goes the opposite way, you can enter in on the second order here and you can make profit when it comes down here. Now, if you see the actual stop loss that I put right here is actually 1,000. So 1,000 would be, it would be right here. But the imaginary one, so the way that I got this number was, if you see 750, 750 is a take profit. If you divide 750 divided by 3, that's how I got the 250 number. And that imaginary number is where the pending sell stop will be placed at. So the 250 micropip will be the pending sell order, or not specifically a sell order, because it could be the opposite way. Like if your first trade is a sell, your second trade would be a buy. So for this example, it would be, the first trade would be a sell, a buy, and then the second trade would be a sell. So 250 micropips, if I get the exact price is, let me round my numbers clear. So I'll put 250 as the entry price, 750 take profit, 250 where the pending sell order would be at. It's not the actual stop loss. So my pending sell for the second trade would be 1.25000. So this second trade would be right here, and it would be at 1.25000. The take profit will be the same. It's going to be 750. And then the imaginary stop loss is going to be 250. For the second trade, we don't need an imaginary stop loss because it's like, we already know where to place the third trade for this strategy here. So if I keep it where the actual stop loss is, I mentioned it's 1,000. I'm going to put 1,000 stop loss, and this first trade should actually be 1,000. But let me backtrack here, because again, this could be a little confusing, but once we start practicing it, it's going to start getting easier and easier. For me, it's like, it's real quick. So the main thing to realize is your stop loss is going to be 1/3 of what your take profit is. So when we're doing our, like, what lot size to be using, if we have a $1,000 account, we should be risking 1%. And this is like another kind of imaginary number because it's not actually 1%. And let's explain that here. So let's go on to, I usually do this through my phone, by the way, and I have a training on how to be able to get like your lot size based off the risk percentage. But let me look at Forex. Forex lot size calculator. So I'm just going to go to this one's baby pips. And we said the account balance, let's say we have a $1,000 account. We're going to say the risk percentage is going to be 1%. And then the stop loss in pips. So the stop loss, the imaginary stop loss is going to be 250 micro pips, which 250 micro pips is actually 25 pips. So that's also something to keep in mind here is 10 micro pips equals 1 pip. Okay, this is something if you're like familiar with trading, you would know. But so it would actually be 25 pips and let's say Euro USD, and we calculate. So it says the lot size to use for this is going to be a 0.04. Okay. So that means for this trade, we would be placing a 0.04. Now the profit is going to be high if we win that first trade. We're risking 1% to make 3%. And it's not actually 1% that we're risking. It's like imaginary because overall we should be making profit at the end of this strategy. So because we'll be making profit if it does decide to reverse. So 0.04, if we do 0.04 times the 750, the 750 micro pips, which is the first take profit on the first trade. Let me bring out my calculator here. Calculator. So we would be making 0.04 times 750. We would be making $30 on this trade. And I see, Franco, you wrote that down before me. Good job there with math. So we'd be making $30 on this, and we would be risking, well, not necessarily risking again, but if it were to drop down into here, we would be down $10. Right? Because this is a 1-to-3 ratio. So let's say this one right here does directly go up and it hits the take profit. We would make $30 profit, which is 3% of your account. All right, this is perfect. And now I know some people or most people in here are part of the auto trader. So what I would do is for my first trade, I would place a trade on the direction that the trade says it's going. So let's say like last night, I think it was a Euro USD sell, right? So my first trade for this would be a sell, and I would enter in instantly. And I have to get my calculations. So that's where like it does take a little bit of time to get your calculations. But to me, the way that I see it is as long as you memorize 250 stop loss or 25 pips stop loss, all you have to do is just change the account balance every single time. So let's say your account balance is 12,500, right? The risk percentage is going to stay the same. The pips is going to stay the same. So you calculate it, and now you just know what lot size you should be using based off that account size. Okay. So we'll stay with this example, 0.04. Now for this second trade, so the second trade, what we're doing is we're going to do a 1.9 multiplier. 1.9 multiplier of the previous trade. And I'll put lot size. Okay. So we're going to place a pending sell order right here. And I'm going to point it out. So this is where the pending sell order would be at. Pending sell order. And it's going to be at 1.9 multiplier. So we would multiply 0.04 times 1.9. So there's just like a few numbers that you need to memorize. The 1.9 you need to memorize. You need to memorize like the 750 and the 250, like things like that. But for this, we would do 0.04 times 1.9. So the lot size that we should be using next is going to be a 0.076. Now, if you see the 6 is closest to the nearest tens, now we have to understand math here. Like at least this is kind of like the basics of math. Now I can't go into the teachings on math there. You probably have to take a math class there, but 6 is closer to or 76 is closer to 80 than it is to 70, right? So you would round it off, and the lot size that you would be using next is going to be a 0.08. Okay, so that's what this second trade would be. We'd be placing a sell order of 0.08. All right, so let's just say price comes up and it doesn't hit the first trade take profit. So we don't make the $30 in the first trade, but then price reverses and it comes down. So if it reverses, our stop loss would be 1,000 micropips on that first trade. So it'd be 1,000. Take profit, everything looks good. Okay. Now, if you can see the first trade stop loss is exactly where the second trade take profit is at. Okay. So let's just say market comes, it activates, we're in on a buy, but then we place a pending sell stop over here for 0.08. So if this second trade hits take profit, let's see who can get it first in the chat. If the second trade hits take profit, it would be 0.08 times 750. Yep. So, well, it's not necessarily the double of what you lost. It's the double of what would have been the first take profit. So you would be making on this $60. Okay. But we also have to keep in mind that the first trade does lose money. All right, because it does hit stop loss. So the first trade, let's do the calculation there if we lost the trade. So 0.04 times 1,000, because it would be 1,000 micropip stop loss. Leo got it first. Eddie got it next. Jose, nice. Okay, so yes, you would take a loss on this first trade for $40. Okay, you lose $40, but you make $60 on this second trade. So total profit that you would make is going to be $20. All right. Now, think about this. You made $20. That's 2% of a $1,000 account. Okay. If you continue compounding, like, $1,000, the next day your account would be 1,020, right? So your lot size is now going to start changing. Now, instead of, well, it would actually still stay at 0.04. But as your account gets bigger, you would start noticing that it'll go into 0.05, 0.06, and you'll start compounding and growing and growing. Now, because the auto trader is pretty accurate, as you guys have probably seen, if we go to connect Auto Market Masters, currently right now, we're up 152%, and we have 0 losses, right? So imagine this, and this is how I use it. So if the auto trader says place a sell, it will activate, or it's not going to say it, but it's going to activate the trade automatically, right? So if you see sell on Euro USD, then what you do is you sell again using this hedging strategy. And based off your account size, I mentioned here what you need to put. So let's say you see a sell and you have $5,000 balance in your account, and then you do this, calculate, it tells you to place a 0.20. So you place a 0.20 for a sell, but then you place a buy stop of 250 micropips away of like 1.9 multiplier, right? So, and again, there's something else that can happen here. Price can come down and it can activate this second trade, but it can probably not hit the take profit. What can happen next is price can come up after the second trade. And what we would do there is we would go on to our third trade. Normally for this hedging strategy, you don't go past like 5 trades. I haven't personally, and I've been using this for a while. I haven't gone past 5 trades, 6 trades. I think the very max that I've gone into was 5 trades. It hasn't gotten into 6 trades. But again, after it finishes, you make profit. Okay. It does require you to be on your computer, or you can be on your phone as well, as long as you have this memorized. But for this next trade, for this third trade, we're just going to keep using the 1.9 multiplier. All right, we know where the entry should be at for this third trade because it's the same as the first trade. We're just duplicating the exact same entry price, take profit, stop loss, everything's going to be the same. So the entry price was 1.25250. I'm just going to do that for this other one, 1.25250. Okay, I already know my stop loss should be 1,000. My take profit should be 750. Okay, so this third trade is now exactly the same as the first trade. And Brooks, I appreciate the compliment there. He said, Ricky, the strategy is awesome. Once you apply it, it might be difficult, but once you get the hang of it, it's real easy. Like for me, it's just like, it's quick. So once this second trade activates, we would then enter in for a pending buy stop right here. Shit. Sec. So we would enter in for a pending buy stop here. And the buy stop is going to be the previous trade. So you can see right here, 1.9 multiplier of the previous trade lot size. So it was 0.08. I'm going to bring out the calculator and let's see, before I get the calculations here, let's see if someone can answer this on themselves. 0.08 and a 1.9 multiplier. Leo said 1.2. I don't think so. That's a bit high. And it's actually not, I don't think so. It's no. So 0.08, 1.9 multiplier. Okay, I'm seeing a bunch of 1.52, but you can round it. So Franco, you did get that wrong. You round off the 5, not the 1. So yeah, 152. So I'm going to do the math here, 1.9. Everyone did show 0.152, but you don't round this 5. What you round is this 2. So it would actually be, you don't do any rounding at all. Rounding at all. You just keep it at 0.15. So let's see who got the answer right. Everyone got the answer right for 0.152, but the rounding off, Jose got it right. Leo got it right. Eddie got it right. There we go. So 0.15. So this next trade that we place right here is going to be, where's text tool? It's going to be a 0.15. Pending buy stop. We already know where our entry point is at. We already know where our take profits at, our stop loss is at, and then you just let it sit. If this second trade did hit take profit, then you just close out the pending trade on this third one. This third one is going to be there after you place the second trade. Like you need to do it immediately after, because it might hit and then come up and enter in over here. So you want to do it quick. But you do have 250 micropip difference. So there's always going to be this gap in between. This gap right here. And that gap is always going to be that 250 micropip gap. Okay. So let's do the math here. Let's say it comes up. So it came down, let's say I activated trade number 2, but it didn't hit take profit. It decided to reverse. And then now it comes up, it activates this third trade. And let's say it comes up and it hits take profit. So then 0.15 times 750, 0.15 times 750. We would be making 112.50, but that's not it, because we would also be taking a loss. So this trade right here would be making 112.50. This second trade, we would take a loss. So it would be 0.08 times 1,000 micropip loss. So we would lose $80, which is kind of a lot, but that's because we are increasing lot sizes. So minus 80. But this first trade also hits its take profit because it hit that first one. So we already did the math over here. It's $30 profit. So what we would do is, now it's 112.50 plus 30 minus 80. And Brooks said 62.50. He was pretty quick with that. Let's see if that's true. 112.50 plus 30 minus 80. 62.50. Good job, Brooks. Good job, Jose. Good job, Eddie. Yeah. So you would be making $62.50. Now, out of a $1,000 account, this is a 6.25% increase on your account. 6.25. Okay. You need to realize that in the stock market, the average return in an entire year is 10%. Okay. And I'll actually look that up right now so you guys can all see. Average return in 1 year for stock market. It's about 10% per year. The average stock market return is about 10% per year for nearly the last century. The S&P 500 often considered the benchmark measures the annual stock market returns. Okay, so we're making 6.2% off of that trade. And by the way, that's not it, because at the same time, we can also maximize off of the auto trader, which 152, we made 15 years worth of someone's stocks, right? So, or the average stock trader. So if we add the auto trader plus on top of that, we go in the direction, the first trade is on the direction of which trade is being placed. So like, let's say we have the Euro USD sell. Let's say like the other day it was Euro JPY sell. Right when it opens a price, whenever you see it, you just go in that direction. Go in the direction of the sell for the first trade, but the second trade will be a buy, right? It's going to be the exact same thing that I'm doing here, but opposite. Same multiplier, same 250 imaginary where the other entry would be at, but the actual stop loss is 1,000. Like this is a whole plan here. You can take a screenshot. You can, hopefully you're taking notes here, but once you use this, it is going to help you out, make you profitable, keep compounding your account. Like there's some people actually, so I taught this strategy previously. This isn't the first time, but people that are using this strategy mixed with the auto trader are making profits. I'm using this myself. Now, here's something else to also consider is I would suggest being awake when you're doing this strategy. Okay. And it's going to be worth it because, you know, you can make 3% or you can make 2% on the second trade, or if it hits the third trade, you can make 6%. If it makes the fourth trade, you'll be making more. So it's worth the percentages to be awake for those times. Like this is where it's manual trading, right? It might not be as much if you have a small account, but stick in there because compounding is a thing. And if you don't know about compounding, I've been posting about this actually like the past month, like consistently about compounding on my Instagram at Risky Ricky. And you'll see that like compounding is real big. And actually I have a quiz for you guys. Which would you rather take? A penny that doubles every single day for 30 days, or would you take $1 million? Penny hands down, penny, penny, penny. Cool, cool, cool. Nice, everyone's saying penny. Now, yes, a penny. quiz. So this penny example, I actually learned way back, like probably 5 years ago. And this was when I was like getting into entrepreneurship, reading books, all this stuff, like constantly educating. And I still do the same now, just not as heavy, but I'm like more working towards helping people out right now, hitting the millionaire status. So, but anyway, so where was I getting at here? Oh, the book that I learned it from was called The Compound Effect. The Compound Effect, and it's this one exactly right here. So the compound effect does have, it talks about like little things that you can do consistently will start compounding with time. And it's just a matter of just starting, right? And with investing, in that example right there, 1 penny that doubles for 30 days, for those that don't know. If you would take a single penny and doubled it every day by 30 days, you would have 5.3 million. Okay. And this is the picture here. 1 penny turns into 2, 2 to 4, 4 to 8, 8 to 16, 16 to 32, 32 to 64. You know, if you keep going here, like even on day 15, you'll see it's 163, right? This is halfway, but if you keep sticking to it, you'll notice like the compounding take effect. Someone else who really talks highly on compounding is Warren Buffett. And you'll see that most of his wealth happened because of like waiting on his dividend stocks to continue compounding after like, I think it was after 30 years, when it was like really taking off. But in the beginning, it wasn't that much. So like, let's see if we can find it here in a picture. Net worth of Warren Buffett, like, but a lot of it had to do with compounding. And actually, I can, where is it here? Did I put it here? I have a area here that shows like the type of returns. Interesting. At least that, oh, here we go. I guess I put it in the wrong area. So training, but this is like the holdings of Berkshire Hathaway, the ETF of Warren Buffett. But like a lot of Warren Buffett's wealth happened from holding on to like some of these major stocks that pays a dividend. And that's something else, like other investments that I get into. Maybe you guys can research more onto that, but dividend investing is really good for like long term. If you want short term, like, you know, I would say this is like for sure the short term quick growth, but long term is going to be like dividend investing. You know, open up Roth IRA, invest into a dividend sharing, dividend companies. And actually, I'll give out one here. A quick tip here is Noble. Noble is a really good one. It's a S&P 500 aristocrat. Here we go. Dividend aristocrat ETF. It's a really good one for long-term dividend growth. Like, yeah, if you do the calculations, it's really good for like retirement, especially in a Roth IRA where there's like no fees on what is shoot, I can't even think of my words right now. No, you guys probably get it. There's no fees from the profits that you make off of a Roth IRA account. So anyways, back into this. Is there any questions? Let's start getting into Q&A, or maybe there's something that maybe I didn't explain that well. I know there's probably some people that joined in a little late, that it's a little confusing. Take a screenshot. I'm going to have a recording of this, so you'll be able to rewatch. But let's start Q&A. What questions is there? See, Brooke said 3% gain per day for 30 days is 142 total gain. So good. You guys, 100% is very rare to come across. Okay. Even 170 trades with 0 losses is rare to come across. Okay. So, even 10%, making 10% monthly, you have to realize that there's compounding, and I'll actually get into, like, there's a link here inside of the Discord. I actually posted previously in the announcements area. Let's see, it was a while back, compound interest calculator. So I'm just going to pull up an example here. Let's just say a $1,000 account. All right. I'm just going to stay more like realistic with this, but let's just say we hit 50% consistently. Okay. 50% monthly. If we hit this for 12 years, okay, with no deposits, no withdrawals, we just keep the funds in there. 1,000, 50%. Calculate. 1,000, the first month we would make $500, right? 1,500. The second month we would make 1,250, because 50% of 1,500, we would make 750. Total we would have is 1,250. So the total balance 2,250. Then 3,375. Then 5,000. Then 796. Then 11,000. Then 17. Then 25. Then 38. By the end of the year, your $1,000 account would have had an increase into 129,746. And this is if we're sticking to 50% growth. All right. Now, if I just change this just by 1%, let's say 51% monthly, the account balance is now 140,000 in a year. I think it showed 129. I might have forgot that. So 140 or 129. So we would be making another 11,000 profit total just off of an increase of 1%. Okay, so percentages is important, and that's the name of the game here. Like, we're focused on percentages. We're focused on what can we do to hit a good amount of percentage, but also consistently. Can we continue doing this over and over? For those that are inside of the bot, I would suggest that once you hit 100% of your money, so let's say you put $1,000 in, okay. Once you flip the 1,000 to 2,000, take your $1,000 out. So this way you never lose money, no matter what. Now you're trading off of profit money. Now you let the profit money do its thing, let it compound. But your 1,000, you never want to lose money, and you don't lose money if it's profit money. Okay, something to realize there. You never lose money. So worst comes to worst, the very worst that can happen is you blow your account. right? But you can never lose if it's profit money. Hope that made sense there. Let's see if there's some questions here that I can answer. Okay, Steve said gonna order, nice. Okay, so why, Arjun said, why bot always sell trade and not buy? It's a good question. We're in a market of sells right now over buys, and overall, something that with this bot, it gets smarter and smarter. So it knows that most trades in a buy will not hit take profit than in sells. So it's just based off of like it's learning. It does place some buys when it spots out opportunities, but it mainly places sells. I missed the beginning. Yes, there will be a recording of this. Great presentation on your strategy. Would the fourth trade be a sell stop with that example? Let's go back. So buy, sell, third one, buy. Yeah. The fourth one would be a sell stop. And real quick, I'm gonna show you guys how I can get the math real quick on this. We see the previous trade, 0.15 times 1.9, 0.15 times 1.9, 0.285. Let's see, that's like the middle, the middle range, but I'll just count this as 0.29. Okay, 0.29 would be this fourth trade, and it's going to be literally the exact same entry point, take profit, stop loss as this second trade here. So if I copy it, put it exactly here, it was at 25000, 750, 1000, done. That's where my sell stop would be at, and it's quick. So right when the third trade activates, you place a pending sell stop. Someone asked, what pairs does a bot mainly trade? So if you can see right here, Euro USD, GBP JPY, USD JPY, Euro JPY. These are like the main ones. Someone said, Ricky, I appreciate your hard work in creating the bot. You're truly changing lives. Thank you. It actually brings me lots of gratitude knowing that people are making profit, and just seeing it daily, like when people post the profits, it just makes me feel good, because not only did I make, like one of the days was like 72K, I didn't make just that much. I made that much plus I made someone else, many accounts this much. And let's just say it might be an additional 50K. So I would consider, like, if I actually made 70K plus 50K, even though if the 50K is not my profit, but I consider it like profit. So will I be able to rewatch this? Yes. I'll have a link inside of the Discord with the recording. If I'm compounding my account of the bot, I should withdraw, right? I would suggest withdrawing the 100%, like I mentioned, the 100% of your initial investment. So you do 0.29. Nice. So Leo actually got this answer before I even put it on here. I'm getting towards the messages. Damn, I wish I would have got into the bot at the beginning when you first launched. Yeah. There's actually a quote that goes something like, the best time to start was yesterday. The second best time to start is right now. And let's see if I quoted that right. Nice. So I did get that right. does the bot have always have one-to-one risk to reward, or there's times where the reward is bigger? The reward is usually bigger every single time. Like, so I'm going to pull up okay, so if you can see the drawdown that we have so far, it's at 14.84, which is, it's fairly high. But if that day when it did have that big drawdown, it was actually on, what was it, this day or something? That was the most profitable day, where we hit somewhere around like 40%. So drawdown of 14 to make 30, or it was like 40. So to me, that risk to reward was worth it there. It did go into drawdown, but it's still fun. So yeah, that's pretty much that. Any other questions before we get off here? I've actually been fasting all day, so surprisingly I have energy. But yeah, this stuff excites me. Seeing people make profits, and if there is anyone in here currently that does want to sign up, that hasn't signed up yet, you can go into the Discord, reach out to one of us, and we can help you out with getting set up. You can also go to connect.automarketmasters.com. And in connect.automarketmasters, you can just go to view signal, and then you just click on follow. Currently right now, it is 147 with 10% of the profits. So you can just click select, and this isn't guaranteed that it's going to stay this. It might increase, but if you get locked in, you get locked in at this rate. So you would just click select, and then you would register an account if you don't have one, or you would log in, and then it would just take you through the process. The tax question, someone said how much tax we supposed to pay. That you would have to speak to your tax professional on that, because it varies based off of which state you're in, and everything. But also places like, let's say LMFX, or brokers that I suggest, they handle crypto. So if you can take crypto, then there's no way of tracking. That's all I will say, unless there's regulations or whatever. But yeah, pay Uncle Sam. Pay Uncle Sam his fair share. But also create businesses. Even if you don't do business at all, create an LLC. Again, speak to your tax professional about this. This isn't, I'm not saying you should, but I would recommend, based off of what I do, create an LLC, tax it as an S corp, exactly what Steve said right there. Steve knows. There we go. Tax it as an S corp, and you pay yourself first, and then yeah, there's different types of strategies with taxes. That's a whole nother topic. But study the mega wealthy that are not paying as much taxes. See what they're doing. Maybe it might be an offshore account. Who knows? Maybe it might be something. Just study the successful. And actually, I am looking into like movement into Dubai. If any of you guys know about like taxes out there, there's literally Arjun said it. Nice. Arjun knows. So you guys speak to Arjun. All right. So yeah. Or there's a more pricier method than like not having a company there, but owning property. Owning property is a good one. It's actually pretty good, but this is if you're I would suggest like visiting it first, see if you like the area. Because it could get really hot. I was actually there during like hot season. And when it started cooling down, I was there for probably like 2 months. 2 months. It's pretty nice. But it's suggested that you have money. You don't want to go there and not have money, but cost of living is like okay. It just depends on where you live, but considering it in the near future, I'm actually working on real estate investments in the US first before I start getting into international investing. All right. Cool. So you guys, thank you all for spending the time here. Most of you guys did stick in here. There was some people that left, and I'm pretty sure they got intimidated when I was going over like the strategy here. It is a little complicated, and I did warn people that are new that this is complicated. If you don't know lot size, you don't know, trading and stuff. But yeah, hope you guys make some profits. And when you guys do make profit from this, just share it inside of the group. Share it. I'd like to see like you guys making profit using this hedging. All right. You guys, let's crush this rest of the week. Tomorrow there's actually news for bank holiday for the US. So let's crush the rest of this week, and let's continue making more money. Let's keep compounding. And this time next year, there should be, I'm praying for a bunch of millionaires from the group that joined. With compound, if we continue 100%, it will be possible. All right, you guys, have a good night. We'll talk to you guys later. I'm about to go eat. See ya.